I'm here. I told myself today I have to sit down and make this trading video because it's straightforward. Yeah, so I just go through the rundown. I don't want to ramble. Just like my third or fourth time recording it. I don't want to ramble. I just want to make it straightforward, simple on how I trade. First, I start on the economic calendar. I want to see if there's red folder news. The reason why I'm looking for red folder news is because I want to see if the market will have a volatility injection. Meaning, will it be volatility? Because it's days like Monday. See, Monday there was no news, and if you go back and look on the chart, you see that I don't know if I remember Monday. I don't know. I'm not sure if I traded Monday. I don't know, but you'll see on red folder days, the market moves. Like tomorrow, we have retail unemployment core, so tomorrow will be a good day to trade also, because you will have volatility in the market. Volatility meaning the market will move. It sucks trading when it's no news or no type of volatility, because you can squint your eye and make a trade look like a trade, and you like, it kind of look, you forcing trades, and it's not even, price is not even moving. That's when you get your that's when price chop. People call it chop or barcoding, meaning price just trades in a range, and it don't really, price isn't being moved around. And we make money when prices move, whether they go up or down. It really don't matter to traders trading short-term investing, meaning trading, day trading. We don't care if the market go up or down. We just need the market to move. So CPI is a good day, is a very volatile day, next to non-farm payroll. Okay, so I start on the economic calendar. Okay, cool. We have a volatility injection. Then I look on the, let me change this for now. I look on the daily because I am a day trader. I look on the daily. So I notice price swept liquidity. I pay attention to what price is doing. So let me see if I can blow this up. I pay attention to what price is doing or has done and is doing. So here on the 13th, price swept grab liquidity here, swept, and traded back up. So I'm looking for higher prices. Instead. It's that simple. Tripping over my words. That simple. Once I get my bias, so I'll do it again slower. Why is it doing that? Let me see. Okay, cool. So, like I said, I start on the daily to get direction or bias. So I'm either going to go long, meaning I want price to go up, or I'm going short, meaning I want price to go down. So I'm going to look on a higher time frame to so I can get the direction. I don't want to be going up. I don't want price. I don't want. Okay, let's just say on this day. This day right here. Obviously, we see price going down. I don't want to be trying to go long or going up. I don't want to be looking for price to go up if something like this is going on. The trend is your friend, so you don't want to look, because I mean, you can look on, if you look on a lower time frame, I'm sure you can find price going up at some point. And if the overall market is not going up and you're trying to go up, you're fighting the trend, and you're gonna get your behind handed to you. You don't want to do that. So I start on a higher time frame to see, to get direction. So like I said, liquidity was swept here and we traded back up. So currently this is what we're doing. We're going up. Okay, and I immediately drop down to a 1 minute chart. I execute on a 1 minute chart, meaning I take my trades off of 1 minute and I manage it on a 1 minute. This is what CPI did. This is what we want. Look at what happened. The news happened at 8:30. This is why. This is what we want. Look at what happened prior to 8:30. Nothing. This is okay. Kind of like a barcode. You see what I mean? And it's trading within a range. It's not going higher than here, and it's not going lower than here. It's trading in a range. But look what happens as soon as 8:30 comes. This is an 8:30 candle right here. That's like 200 something points. That's like one contract. That's $4,000. This whole candle is $4,000. This one single candle is $4,000 for one contract. But anyway, let me see. Let me go back. My executions on the chart. Okay. I only took 2 trades, a loss and a win. So price came up. So clearly I'm looking for a price. And see, okay. Now this is what happened during CPI, the news. So, and I said I'm looking for higher prices. So I'm looking for higher prices. This is what happened during the news. So everything is working. And I remember also ES, the S&P was going up. I trade NASDAQ. This is the NASDAQ. So both the NASDAQ and the S&P was going up. So the stars were aligning for me. And I feel confident that price will go up. But price will still do what it's going to do anyway. I mean, price don't need you to do what it's going to do. If it's going to go up, I mean, my bias was long, meaning I want price to go up. But price still can do what it's going to do or what it want to do. It can just drop. And that's why we trade with stops. You just get out of the way. With your stop, let it stop you out. It's a pleasure to be stopped out. Okay, so let's talk about the trade that I took. I trade essentially my trades are what's considered a bull flag or a bear flag. Bull flag meaning a bull flag will be up. Price come up, comes down, and up, and it breaks out. A bear flag will be the opposite. I don't want to go find those example right now, but so my narrative was price going higher. So when the market opened here, this is where the market opened at. Market opened here, it went down. So when I see the market going down and it even broke this low right here going down, that didn't bother me. I don't care nothing about the market going down. Why? Because I already said I'm only looking for price to go up. So if I don't see a setup of price going up, then I'm not taking no trade. You know, that'll having a bias keep you out of that, cuts down your trades to half because you're only looking for one direction, not two. And I don't counter trade my bias. So the market opened here, it went up, came down, and it continued going into the same direction the overall direction, which is going up. So I got interested when price broke here. Price came up and it broke this over here. So this is what it looked like. So the price was here. It did this stuff. Then it came up, breaking. You always want to look to the left. It broke this high. So we're breaking out. We're entering new territory. So we ain't been this high within the last hour. So I got interested in. So now I'm looking for price broke out, and I'm looking for price to come down to either this purple line or this red line. I'm looking for trades off of this purple line around like from market open to 945, 950. So the fact that I took this trade, as you can see, I took this trade, I got in here where this blue arrow at, and I got out here. So I got in and out in about a minute or less because price didn't do what I wanted it to do. I'll explain. So price came up here, a new high, came down, came down, came down. I should have known right here, but crank came down, came down. This candle pierced this purple line. So once I get a high, I'm looking for price to pierce. Excuse me. I'm looking for price to pierce this purple line or this red line, depending on the time. At this time, I should have only been looking for price to pierce the red line, so I should have just ignored this pierce. But I got tripped in right here because I'm looking for, once price pierce the purple line, I'm looking for price to break above the high of the candle that pierced the line. So anytime, anywhere above this right here, as you can see, this candle did it. So I got in here. Price was 21,330 and a quarter. And what did I get in at? I got in at 330. I can't really see it. Yeah, 330 and a half. So I got in just at the break. And as you can see, it came down. But I didn't, you know, I just, and my stop was below here. But, I noticed what time it was, so I got out. And I let price, because the actual trade that I should have been looking for was the pierce of this red line here. So price came up to a new high, lower candle, lower candle, lower, 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 lower. It pierced this red line, right? So then now what I'm looking for? I'm looking for price to break above this candle high. The height of this candle, I'm looking for price to break above the height of this candle. Why? Why this candle? Because this candle pierced the red line. And as you can see, price came above this candle. So my entry will be here. As you can see, 2-1. If you look over here, the break will be 2-1, 3, 1-8. And look at my entry, 2-1, 3, 1-8. And I'm looking for price to go to here and through here, to the high and through the high. And my stop will be below the low of this candle. So my logic is, once I get in, I don't want to see price come below this low, because if it's gonna come below this low, then I mean, we have this this blue line also that can catch price or can act as support. But I'm not looking for price to go that low. I'm only using these two. I use this for something else, but we're speaking only about this trade here. I'm looking for price to break above this candle and go back to where it came from. See, price came from here and it came down here. I'm looking for price to go back up here. As you can see, price did it, and it continued to deliver. So I'm using a 1 minute candle. So I got in here 1 minute, 2 minute, 3 minute, 4 minute, 5 minutes. So that took 5 minutes. Let's see. Let me see. Simple strategy. Simple, effective, very effective. And price continues to do this like over and over and over. To go up, come here, break out. So let's do the math, because I know people like to use like to see numbers. Okay, but again, okay, I don't know if I mentioned it in this video. I put myself in timeout because I'll say this real quick. I put myself in timeout because I got funded. So me getting funded is not, it's, I can easily get funded. I don't have a problem getting funded. My issue is staying funded and not being so impulsive. That's the only thing that's my only issue. Being impulsive. I know how to read price action. I know how to trade. I know more than one strategy. The strategy that I just explained, I see it easier than the other ones. I understand the other ones also, but I see the strategy that I just explained, I see that easier. I can see it in my sleep. I don't know how you can see it in your sleep, but anyway, my issue is staying funded and not being so. My issue is not being impulsive, because let's just say, move this to the side. Let's just say, let's see. Price runs up, and is that a good example? Let me look for a real good example. Okay, even, I mean, yeah, okay. The trade that I took. Okay, let's just say I see price going up, up, and I'm like, oh shoot, I want to jump in, and I jump in. Okay, where's the logic of me in me jumping in? Where am I looking? Let's just say I got in on this candle. Where am I looking for price to go? I'm just gonna jump in and stay in until it feels good to get out, or if it hit a certain dollar amount. That's not a strategy. That's dangerous to do, because look what happens. It comes back down. And if you get in and let's just say it was up $400-500, and then it start pulling back on you. Now you negative 1,000, negative 1,500. You're gonna get out, only for price to continue to go up. Mentally, that does something to you. So my issue is being impulsive. So the result of being impulsive causes me to blow up my accounts, meaning I lose the funds in my account. So let's just, for numbers' sake. So one contract of the NASDAQ, see, you can go from one contract to 2 contracts to 3, but each one of these contracts, every time price move, let's say price move from 307, 213, excuse me, 218.75 to I'm sorry, let's say price is 213.08.75, and it goes up from 8.75 to 9.75. 9.75. Okay, that's close enough. That's $20 per contract. So so my entry was here. Let's do, so we're gonna do the difference. So we're gonna start with this number, 2, 1, 3, 4, 4, minus this number, 2, 1, 3, 1, 8. 26 points. So from here to here was 26 points. Remember I said each point is $20. and I took 5 contracts, so I would do times 5, 2,600. So 2,600 in 1, 2, 3, 4, 5 minutes. So it don't matter if and here I only took 3. Okay, so the reason why I took 3 contracts here and 5 contracts here is because, let me make it clearer. So I only look for price to pierce this purple line up until like 9:45, and right, it was after that time. So I'm not supposed to be looking for price to pierce the purple line no more. I'm looking for price to pierce only the red line. So anything that pierces the red line, then I become interested. So this right here, this trade, I should have avoided. But you know, I took a loss. That's fine. So that's why, um, that's just a mental note for me. Um, I was more confident in this red price piercing this red line and going. Not this. I mean, I wasn't paying attention to the time, so I'm like, okay, price is, once I got out here, not here. I got out here and I got in on the next candle because price came up and came down and pierced the red line. So I'm looking for the break of this high here, which was on this candle. So that's why I went in with 5 instead of 3, because I'm like, I'm more confident in this trade. Um, so that's my trade. Simple strategy. If you're patient, what I said was 2,600, right? Let me do the math again. I think I said it was 2,600, right? So we're gonna do the difference between this and this. 344 minus 318 times 20 per point. 26 points times $20 per point. So 520 each contract. I took 5 contracts. So times 5 equals 2,600. So I made 2,600 in 5 minutes. So it don't matter. The thing, you want to get the strategy down first before you start. You don't need a home run. 2,600 in 5 minutes. You don't need a home run. That's 2,600. Let's just, what I said, 26 points times 20. If I took 1 contract, it would be 520. So if you want to increase your winnings, just add more contracts. I mean, I know someone that trades 30 contracts. So on that same move that I took, they would have made 15,600. And someone that don't have such a big account would take 1 contract. So 26 points times 20, they would only make 500 on the same exact move. So you have to just get the move down first and then focus on profits. So that's my trade. Hopefully that helps. Hopefully that helps. Just rewatch the video. Simple strategy. It's overlap. The reason why I'm sticking to this strategy is because it's an overlap of another strategy that I really like and enjoy. But this is more simpler and simpler to teach. So when I'm making these videos, I want to go back and be able to explain the trade. And if someone just rewatch what I mentioned, they'll be able to you know, test it out on their own and see. I'm gonna see if I can find another. Let's see if something else happened. I don't see anything. Not yet. I think the move happened already. Nope. See, market's still open. Yeah, the move happened already. Let me see. RTY. because this strategy works on all markets. Let's see, 9 o'clock. Nothing on TY. Okay, let's check gold. Let's see. This will be one right here. This is my last example. Okay. See, we get. It's okay. Remember, we're looking for price to go higher. I didn't look on the daily chart for gold, but just follow this example. See, price was ranging, and it finally broke out here, and lower price, lower candle, lower candle. So we're looking for a price to break above this candle, right? We're looking, see, high, lower candle than this, lower candle than this, lower candle than this, and we're looking for price to break above this candle that pierced, well, it actually pierced this candle. This candle actually pierced it, and then another candle printed. So now we're looking for price to break above this candle. Price broke above this candle, and we will look to take it to this high from where it came from. So there was a trade here. I don't trade gold though, but just letting you see that it actually works. So yeah, that's my trading video. Hopefully that helps. So when I lead someone to this video, if you rewatch it, you should be okay. So yeah, if you rewatch it, you should be good. So hopefully that helps.